All right, we have another opportunity that I'm so excited about. I could be wrong, but for those of you guys been following me for 6 or 7 years, back in 2018, 2019, 2020, I was harping on this about this idle equity we have in our investment properties. And this could be any investment property, but for this case, we're going to talk about the single family 1 to 4s. That equity is just sitting there with interest rates going down, prices going up. You have the opportunity of this idle idle value not being used. And what we talk about then is extracting that, harvesting it, or at least a portion of it, and putting it into play in something else. Now, I think we have an opportunity right now in 2024, probably for the next 6, 8, 9 months, as the interest rates start dropping down, values start coming back up, cash flow is still there, lenders are going to get more relaxed. I think you have another opportunity here to go revisit this. But let me show you what could have happened if you're sitting on this idle equity and extracted it and put it into play like we talked about. So we'll kind of go over some basics for those that weren't following around what this means. This is what we're calling the wealth formula. And wealth formula is harvesting equity in your investments. And it's because it's a refinance and it is debt, is not taxed. So it's tax-free, check your CPA, to acquire larger cash flow producing properties or businesses. So most people can understand that their equity in a property is basically sitting there like a lazy teenager on the couch, eating popcorn and chips, playing video games. We want to just employ that equity, go grow and go work for us. So back then, and still is today, the problem is for people that bought single family rentals in using the Fannie Freddie mortgages, you maxed them out. You're only allowed 9 plus your primary, and good luck getting that number. It's usually 6 or 7. If you're buying other assets, you reach your aggregate limit with the bank lenders, meaning you borrow too much money from them, and you have too many personally guaranteed loans, which means your balance sheet is a little bit out of whack. You're equity rich, but you're light on cash. Legacy changing deals will present themselves. So you want to be sure that you'll be able to take advantage of those opportunities. I'm telling you, in the next 12 to 18 months, it's going to be there. And let me just kind of show you what just happened last 3 years. But first, let's get to what this commercial portfolio loan looks like for those that don't know what it is. What you're talking about here is multiple properties under one loan. So instead of having, let's just say 7 or 8 or 9 Fannie Freddie loans with 7 or 8 or 9 mortgages, you're going to have all those properties under one loan, one payment. It's ideal for residential 1 to 4 units, but can work for other assets as far as a strategy. We're going to harvest this idle equity tax-free. This is going to allow us to reset our Fannie Freddie availability. If we're able to get non-recourse lending, which is still available right now, it will be able to increase your aggregate limit with your bank lender because you're not personally guaranteed those loans. You can borrow through an entity, which also helps protect our assets. And that can be newly formed as well. It's going to clean up your personal balance sheet, reduce and eliminate your personal guaranteed loans, and it's going to allow you access to additional funding sources. The most powerful thing right now is the ability to go borrow money and have some dry powder, so to speak. So here's what we were talking about in 2021. We kind of do a little time travel back then, and we're looking at people that had bought properties back in 2014. And just for ease of understanding, this is kind of high levels. If you're not a math person, just try to grasp the overall high arching theme here. If you are a math person, don't get too deep in the weeds here. Look at the high arching theme. But let's just say you bought 4 identical rental properties in 2014 for $800,000. You put a loan on for $640,000. In 2021, this is 3 years ago, that value is $1.2 million. And if you just allow the normal course of the pay down a 30-year amortization, about $575 is what you owe. You have roughly $625,000 of trapped equity just sitting there doing absolutely nothing. So we were talking about then is pulling out 75% of that appraised value, so roughly $900,000. And if you subtract out the loan balance, you'd have $325,000 available to you. Now, remember, when we cash out, refinance this, they will debt service based on the lender's criteria. You're not going to go negative cash flow. They must positive cash flow. So $325,000 before closing costs, and that is debt, not income, so it's not taxed. Obviously, check your CPA. So in this case, what the power of the saying is, again, back to tax-free. No tax returns needed with these type of lenders, up to 30-year amortizing loans or interest only. At that time, it was 75% loan to value. There's really, at that time, not much of a seasoning period. You're somewhere between 30 days and 4 months. You'd have one single payment that include the taxes and insurance, so less headache when it comes to paperwork. Properties will cash flow positively. There's a minimum 1.25 debt service coverage ratio there, means after the mortgage is paid, you still had cash left over. It's a commercial loan, so it does not report on your personal credit. And the power back then was a non-recourse lending. So what were the possibilities, and still are today, for people that did this? So you could bolster reserves, just stuff in the bank, you could buy another property cash, refinance, and do that multiple times. Acquire up to one property that's $1 million plus. Multiply that cash with a guidance line of credit. Those are still available right now. So you can, if you do multiple DVs, you have a little liquidity. Lenders will give you a guidance line of credit, meaning you're good up to $3, $4, $5 million in purchasing power. Or you could buy stocks, Bitcoin, gold, silver, buy a Ferrari, invest passively, or be a private money lender. It is your money unencumbered. Do whatever the heck you want to with it. So what could have happened had you taken action back in 2021, let's just call it $100,000 for simplicity. If you bought gold in 2021, it was $18.46 an ounce. Now it's $25.19. So that $100,000 is now worth $136,000. Just an S&P index fund. And this is totally passive here. Put $100,000 in the index fund. What does it look like? Well, it was $37.93 in 2021. In 2024, it's $55.95. That $100,000 is now worth $147. Bitcoin. So those are saw the light in 2021. Bought some Bitcoin at $33,000 a coin. It's now up to $64,000. Your $100,000 is now worth $194,000. What if you just bought a single family home with debt using $100,000? You put 25% down. In 2024, it's now worth $500,000. So you take that $100,000 that you put into this first equity, it's grown by another $100,000, and you pay down the principal by $25,000. Your $100,000 is now worth $225,000. Plus, there's a whole bunch of tax advantages there. Now, what if you got lucky and decided, hey, I'm going to put it all into one stock, and I just have to pick NVIDIA? What does that look like right now? Well, if you did this, I want to come shake your hand, and you can buy me lunch, because that back in 2021, that was $12.96 a share. Now it's $125 a share. That $100,000 is now worth $969,000. You're almost a millionaire just by doing that. And by the way, you still own the properties, and they're worth roughly $2 million right now. Plus, you still receive the cash flow. That's the power of harvesting the equity and doing something with it. All right. Like I say, in 2024, Fed's about to cut some rates. I think the 10-year treasury is going to come down. Things are starting to almost loosen up as far as lending, and it's going to be a go time. So what can be done now? Let's just say you didn't do this. And whether you did or didn't, or just started, whatever, don't get caught up in this. I just want to show you the overall arching theme here. But in case you didn't do this in 2014, 10 years later, you hadn't put a new loan on this thing, and you're saying, hey, it's time to go do something. Well, those 4 properties worth $800,000 back in 2014 are now worth $2 million. And you paid that loan down from $640,000 down to $300,000. You have $1.7 million sitting in trapped equity in just 4 properties ready to do something. What if we extracted 65% of the value of that? Now, you could go higher, but this is a very low leverage scenario right now. It's probably going to go up a little bit, but just 65% loan to value is pretty much in the sweet spot right now. That loan amount would be $1.3 million. You have a loan balance of $300,000. Your net proceeds before closing costs is $1 million. Think about that for a second. You refinance those properties, you put $1 million in there, tax-free, check your CPA, and you still have the properties. That's pretty unbelievable. And again, that $1 million is unencumbered. You can do whatever you want to with it. It's not tied to anything. It's not a loan. It is debt, but it's not a loan. Let's just say we only take $500,000 of that and do something with it and employ that. What would happen in 2027? Just what could happen potentially. This is for illustration purposes only, by the way, so nothing guaranteed life, fixed taxes and death. But let's just say we bank $500,000 over here. And you still have the net equity from your current rentals. This is, 2027 is what we're looking at here. $785,000 is available to you still. So you're not upside down. What if you put that $500,000 in gold? Well, now it's worth 29.72. So that 500,000 is roughly 590,000. What if you compounded, or if you became a private money lender and compounded that interest rate, that interest that you earned at 12%? That's $702,000. You just bought an index fund. We're thinking, well, we're not we, but the experts, quote unquote experts, are thinking it's going to be roughly 79.51 by 2027. So that $500,000 can be worth 710,000. If you did Bitcoin, again, these Bitcoiners out there, don't harp on me. It can probably get to 71,000 by next week, but just say play conservative numbers here. It's roughly 590,000 by then. Buy 3 single family homes with leverage, roughly 1.95 million at the time. After debt, including your equity, it's worth 950,000 just with normal growth because there's still a housing shortage out there. Again, back to NVIDIA. If you buy a single stock NVIDIA or something else, not time to buy NVIDIA, just use that as an example, and it goes up to 436, like the quote experts think, that $500,000 is now worth 1.7 million. I'm gonna throw another one out here to get your mind working as far as how to use your equity to grow. What if you bought multiple businesses and rolled them up? And it doesn't matter what it is. You can buy 3, 4, 5 businesses with $500,000 or more. You can still get lending on that with 85, sometimes 90% leverage. And he rolled multiple up and he sold them for 5 to 8x EBITDA. That is life-changing right there. That would dwarf NVIDIA, what you can go do there if you have that expertise and surround yourself with that team. Just putting it out there to start thinking a little bit bigger here for 2024, because in 3 years it's going to come and go. And what you have is up to you. So invest. So next steps here. If you have idle equity, I want you to take out your phone, scan our QR code over here that goes to the contact page, fill out your contact information. We'll send an email with a calendar link and be able to coordinate a call with you. If you have that idle equity, we're going to need 3 things: personal financial statement, scheduled real estate owned, and your estimated credit score. If you don't have those templates, the PFS and the scheduled real estate owned, just let us know in the notes and we can send you the templates there, and we can quickly get you a rough idea of terms and if it's going to make sense to be able to go do this. Now, if you have other investments out there, either businesses or other commercial asset types, and you want to explore harvesting that equity, or you're just looking to buy something, scan this QR code, go to our website, see our lending solutions. So hopefully this helped you guys out, and we're happy to be part of your journey in 2027 to financial freedom.